Hello and welcome to part 2 of the Wealth Through Real Estate Investing topic training series. I'm Michael Manatskanian, the host of the Wealth Through Real Estate School community, as well as the instructor for a lot of these trainings. So what we're going to talk about today is the part 2 of the Wealth Through Real Estate Investing series, which is basically the 4 ways that I generate income through real estate investing. Last week, we talked about wholesaling and fix and flipping. I mentioned why they're beneficial, but also why I don't highly recommend them to others. In my opinion, there's more efficient ways to gain capital and build your skill set as opposed to wholesaling and fixing and flipping. And there's much more cost-effective ways to generate that income. If you want to learn more about those two, this is not the right community for that. There's plenty of communities out there that will teach you how to be a great wholesaler and how to be a great fix and flipper. That's not really the focus of what we're doing here. We're doing here is building wealth through real estate efficiently and strategically, leveraging what has worked for me to build my portfolio. And so part 2 is going to focus on lending. And actually, there's a 2-part series for lending next week and this week. This week's focus is transactional lending, whereas next week is more longer term lending as a private money lender or private money partner. This week is transactional lending, where we're going to be talking about the 2 most efficient and effective ways to lend transactionally are paying the earnest money deposit for lenders, or we're going to talk about covering the earnest money deposit for wholesalers when they're putting a property under contract with a seller. And we're going to talk about the earnest money deposit that you provide to buyers when they're putting a property under contract from a wholesaler. And then secondarily, we'll briefly touch on the topic of double closings, which is another great way to really get high returns on your money. So why do I like transactional lending before we go too deep into it? It's very efficient. It's much more efficient than trying to find a motivated seller, put them under contract, put them under contract, shop that around, sell it to someone as a wholesaler would do, or, get a property that you want to buy to fix and flip, raise the capital, close on it, do the whole fix and flip, sell it. All that is inefficient. And there are better ways to get a higher return on an investment than going through that entire process. And transactional lending is great because you can get as low as like 10% return on your money in a very short time frame, up to 100+% return on your money. For example, I get approximately 40% return on my money for every single EMD, earnest money deposit loan, that I do. So let's say I lend someone $5,000, a buyer, to put a property under contract from a wholesaler. They need $5,000. Well, they're going to pay me 40% of that, or $2,000. So within a 30-day span, my $5,000 turns into my principal of $5,000 back plus $2,000 of interest in 30 days. That's a phenomenal return. And if you can scale that and have a decent volume, let's say you just do 10 of those. I mean, 10's a lot. Don't get me wrong. It's a lot to find the right leads to be able to provide that service to them. But 10 of them would generate you $20,000 of new income from the interest from just EMD lending to buyers. And the main question would be, why would a wholesaler or buyer use your money and pay you 10, 20, 30, 50, 100% return on your money? And that's because it's scalable. It's much more scalable for them. It's the same reason why when I buy real estate, I never use my own money. Doesn't mean I don't have money to put into real estate investing, but if I use my own money, then my business can only buy as many properties that I can fund. That's not scalable because I'm the bottleneck financially in that scenario. And if I don't have the money to buy 5 or 10 deals, but I have, let's say 10 great opportunities presented to me, but capital is my limiting factor, that's not great. So that's why I use other people's money to buy real estate. And then I lend my money to others as a transactional lender and as a longer term. That's why I lend my money to other buyers, investors, wholesalers for transactional lending, as well as for a private money lender, as well as a private money lender to get around 12 to 15% return on my money over longer time periods and put more of my money to work at once, or as a private money partner where I'm actually taking ownership of the asset with them if it's a good enough deal. So what's worked really well for me, use other people's money to buy real estate, right? Because that's scalable. And then lend my money to others, whether it's transactionally or longer term, because once my money runs out, that's okay. That's actually perfect because that means I've put all my money to work. So when I get more back, then I keep lending it out. But that's not limiting. That's not a limiting factor, which is great. So let's go into it. Why would a wholesaler or buyer use your funds and pay you 10, 20, 50, 100% returns on your money? Once again, because it's scalable. If they have 5, 10 deals to fund at one time, they don't want to think about all the money that they have to put into it. Even if it's 1,000 per deal for a wholesaler, that's still $10,000 that they have to put into the deal and just wait on, and it's sitting there for 30 days. That's a limiting factor because maybe they have 30 deals that they want to put under contract. Maybe they have 50 deals. Those are high numbers, but at least they're not dependent on their own personal funds to be able to fund the number of investments they put under contract. And the reason why I love it is because for us, it's very scalable. As long as you have the money, you can fund as many wholesale deals or as many buyers to put properties under contract as possible. The goal is you want repeat customers who are trustworthy. That's my number one thing, is ideally people with experience who are trustworthy. But the one downfall with lending is if you are not doing it right, if you are not protecting yourself, well, you can lose your money. And actually, when it comes to lending, you should always think about the fact that your money that you're investing as a lender, that you're lending out, is always at risk to be fully lost. So you should never lend money out that you cannot comfortably lose. No one wants to lose money, but it's a caveat, something to consider, something to think about. Don't invest money that you cannot comfortably lose. Don't invest your last dollar. Have a solid emergency fund, savings account, whatever, set aside, and then lend the excess from that. Just in case something does happen and you lose 1, 2, 3 lending opportunities in a row, you're still financially able to continue on with your business. So we will talk more in the future when we deep dive into the lending strategies. And that comes in the next future series. We'll talk about specifically how can you protect yourself to minimize any risk that you have, right? You cannot eliminate risk, but you can minimize it substantially by doing everything the right way. And then we can talk about how to find buyers, how to find wholesalers, but it's the same as everything else. You only get what you put out. So if you're not connecting with people, letting them know, hey, I am a lender, I cover earnest money deposits for wholesalers up to $5,000, and this is the return that I'm looking for. If you do not present that to someone, no one will ever come to you and ask you for that, right? Because no one can solve your problem if they don't even know what your problem is. So you have to constantly be networking with people. And this is just another tool in your tool belt. Let's say, for example, my business, right? I'm lending earnest money deposits to wholesalers and buyers. I'm lending private money loans, typically not a lot of private money as a private money lender, because I can do more than that 12% return typically that we get. But I think that's great for a lot of people because then they're getting that 12% return on their money. But for me, I can just go buy a bunch of real estate. I can lend as a private money partner to other people's properties and own that asset with them and come in with some operational experience to really get me quality equity in that property. Or I can lend it transaction and get really, really high returns on my money. So that's what we focus on here, is just like kind of what am I doing and why does it work so well? And the reason why I really love lending is because it really gives you a solid insight into what deals are getting done and what's not. You are seeing, okay, these are the types of deals wholesalers are putting under contract. This is the amount of earnest money deposit they have. You're going to, if you're doing it right, you're going to review their contract and you're going to see that, okay, what does their purchase and sale agreement look like? What are the terms of their loan look like that they've structured? Like how have they negotiated this deal? What is their planned exit for the property? Do they have a buyer? How quickly do they get a buyer? What markets are working well? You're just learning more and more at the same time. And if you're lending right, you're not just throwing your money out willy-nilly. It is underpinned by the thing that is the most important in any type of investing, which is understanding deal analysis and underwriting. So your goal should be to understand, if someone asks you to cover if a wholesaler asks you to cover their earnest money deposit, the first thing you should do is underwrite the deal and say, okay, do I think that there is a good buyer for this type of deal? Is it cash flowing? Is there equity in the property? Are there some benefits of this property that will that will result in someone buying it? Is the wholesaler experienced at selling these types of transactions? This is their first one. That's a huge part of minimizing your risk, is by understanding the deal and saying, is this actually viable? Is this a viable deal? Would someone actually be willing to buy this? Or am I just basically wasting your time and money? And now you're putting money into a wholesale deal that will never actually close because there's no real buyer for it. It really teaches you, if you're doing it right, how to see lots of different deals, how to lend on those deals. And even better, if you're someone who's like a transaction coordinator or something like that, you can get additional benefits. For example, for me, how can I add additional value to a wholesaler who has a deal that needs earnest money deposit? First and foremost, I can get solid returns for helping them with the earnest money deposit and lending them funds on that transactional loan. Then we have transaction coordination services that we can provide to them to help them out. So that's another benefit, another value we can add to them to make sure that they're doing their deal right. Then I'm a buyer, so maybe I now have first access to review that deal and say, hey, is this something that I want to buy? Or maybe it's even before they put under contract, I can let them know, hey, I may not buy it at these exact terms, but I am willing to buy it if we are able to reduce the purchase price, reduce the interest rate, reduce the entry cost, whatever. So you can help them negotiate and structure that deal. So then you're buying deals exactly the way that you want to be buying deals. So these are all various other benefits you can get by understanding the flow, the benefits of the transaction, understanding that the wholesaler put the property under contract, they need the earnest money deposit, and then what comes after that? Transaction coordination, they need to conduct their due diligence, they need to find a buyer. You can provide value or provide those services to them, be their buyer, be their transaction coordinator, because now you're doing multiple parts of the transaction with them. But as I mentioned, one of the best skill sets to develop to understand and minimize your risk for investing as a transactional lender or a longer term lender, or really anything, as a buyer, a lender, a connector, whatever, it's to understand the deal. Does this deal make sense? Right? Does this property, do they put under contract $100,000 more than it's worth? Is their after repair value substantially lower than the purchase price that they're buying it for? Does the property underwrite and does it perform well in regards to cash flow? Is the exit strategy they're recommending, if they're saying, hey, we're going to do a short-term rental, but it's in the middle of Missouri, it's a 1-bed, 1-bath, random place that's like, well, why would this property perform well? That underwriting skill set, that mentality is what's going to help you become a better buyer in the long term. Because at the end of the day, your eventual goal is to be a lender that gets equity and assets, or you're a buyer who is locking up your own deals, and then you're locking up your own deals. But if you don't want to get to that point, you could also just lend your funds, and that's a great way to do. That's a great thing to do. So, okay, we'll let Jackie in real quick. So, just to recap, part one of the wealth through real estate investing topic trainings was focused on active income. How can you, generate some active income? And we talked about wholesaling and fix and flipping. I don't recommend either of those. I do both, but I don't recommend those because I think it's much more efficient and better to focus on lending if you have the capital to do so. If you don't, we're going to talk about connecting in the future. That's actually coming up. I see it on my board now as a future topic to discuss, which is basically where you're either finding people with capital and connecting them to great deals, or you're finding great deals and then connecting them to people who are looking to buy those deals, or to capital that wants to lend on those types of deals. Once again, the better you are at underwriting and deal analysis, the more effective and efficient you are with your time, because you quickly know what's the point of giving a wholesaler earnest money deposit, like lending them funds for earnest money deposit, if the deal itself makes no actual sense. Why give them that $1,000 and then they have to return it to you within the next 10 days before the due diligence period is up because they can't sell it? Well, now you just wasted time wiring funds, putting the contract together, evaluating that deal, all this stuff to then just get your money back and nothing really to show for it besides some wasted time. But also, I guess a little educational learning, but you can, if you just think of analyzing deals first and foremost and underwriting those deals first and foremost and trying to think, does this property have a logical exit? Is this actually an investment or just a property for sale? That will help you. That will pay massive dividends, not only to develop your skill set when you become a buyer or a whatever your end goal is, right? Just understanding deal analysis is going to help you every which way. And at minimum, it will help you just understand, should I spend my time lending this money out? Should I spend my time trying to connect this deal to someone? Should I spend my time buying this investment? Or should I just move on because this is not a non-viable option? So it all starts with underwriting and just being able to understand, is this a good investment? Is there a buyer for this investment? Am I going to get something out of it that actually makes this beneficial? So we're basically done with the transactional lending piece. This is just an overview. We'll go deep. We have a multi-part series in the future where it's going to go actually how to do it, how to secure yourself, how to analyze it, all that good stuff. It's being built out in the future, or it's getting developed as we continue along. But the next way to generate wealth through real estate, the topic training will be overall lending, longer term lending, which we'll be talking about next week, and we'll be in this training series. So I'm going to open it up to see if there's any questions for right now. Otherwise, we will wrap it up for the day. Any questions, guys? I know Jackie came in a little late.
Hey there, I'm so sorry.
It's okay.
Yesterday I came a little late. It's so hard. I'm an interior designer, and I'm also working right now with an investor trying to create a proposal for an wedding event. It's going to be an STR as well. So I'm really busy with that.
Nice.
But I'm actually getting getting some knowledge about doing underwritings and finding deals. I currently have a property which I kind of like the hopping. I used to live in this property, and then I got some equity money from there, some cash out when I refinanced, and then I built another house, and so the other one is a rental now. And so I'm trying to do the same thing in different states. And
You're trying to do it by living in it and then renting it out in the future, or buying a property
not
strictly as an investment?
necessarily,
Okay.
yeah, like that. Yeah, not necessarily. And the reason is because I have kids that are all teenagers and they
Right.
have, their roots now with the school. And so it's a little bit hard to be hopping,
Right.
to different locations. So that's the reason I'm trying to learn this new thing, about, like, I don't have a lot of capital right now because I put pretty much all my capital into creating my own business.
Right.
So yeah, so creative financing sounds really appealing to me, and I want to learn the ins and outs of it. And yeah, so that's the reason why I'm here.
Right. And I think that's a perfect spot to be in. I mean, we don't only talk about buying deals, leveraging creative financing, but we do. I mean, I bought almost $10 million just last year alone through creative financing, but also leveraging other people's money. So whether it's a private money lender or private money partner, I think that's the most valuable piece, because even if you have creative finance opportunities, you're still going to need money to purchase those properties. Whether it's
Absolutely.
creative, traditional, whatever, you're still going to need money from somewhere to cover the entry cost to acquire that
Yes.
asset. So
Yes.
I think it's a combination of the two. It's knowing how you want to buy deals and then how you're going to cover the entry cost for them. And that's kind of, I mean, that's exactly what this community is for, is learning, my business model, which is buying real estate, leveraging primarily creative financing, but also traditional financing. And, we have some advanced acquisition strategies, but also leveraging other people's money to buy those deals. And then with my own money, what I do is I lend them out to others as a transactional lender for short-term loans, or as a private money lender or private money partner, depending on the deal that's brought to me. So I think this is very much in alignment with what you're looking to do. And that's why we're building that series as we go. This is just the
Perfect.
week 2. We're just starting out the overall overview of kind of what we'll be talking about over the next several months. And that's the cool thing, is that real estate investing, if it's done right and intentionally, people understand there's a timeline, there's a process to doing things and developing those skill sets, taking action, and then just building on it over time rather than trying to rush it all at one time. So that's gonna be fun to like build it with everyone as we go, so then they can recreate similar business models to mine.
Perfect. Yeah, that's exactly what I'm looking for.
Awesome. Awesome. Do you have any specific questions I can try to answer for you right now?
Yeah, so actually, like you mentioned, how can I leverage that capital? Because I actually found a really good deal the other day. I'm actually in different websites where they do creative financing, and this location I actually worked in Destin, Florida, last year, helping an investor with staging of his home,
Mhm.
to make it an STR. And so I love the location. I noticed that it was like in high demand, especially during summer. And so I was thinking like, oh, I would love to buy something here.
Mhm.
And all of the sudden, this happened just like a couple of weeks ago. Um, Somebody posted it that there was a deal for that. I don't know, because like I said, I'm barely starting with this. I didn't know how to underwrite the
Right.
deal. And so I was like, oh, is this good? It seems that it's good. Like the numbers kind of make sense. The exit, I know it wasn't allowed as an STR, so it was going to be like either MTR or LTR, which I was
Because of an
okay with.
HOA?
Yes,
Hmm.
yes,
That makes it tough.
exactly. And the HOA was high,
Mhm.
especially for that location. And I've been looking for a while, and it's pretty much the same for every single deal that I find. Um,
So there's a few options. I have training. So once you get to a certain level, I think it's level 2 or 3, there's a
okay,
variety of deal analysis
okay,
trainings that you can just watch and follow along. I have my free creative finance investing calculator for
okay,
download. It should be linked, and it's definitely on my website. So just look at the links in the Skool community.
okay.
There's also there's a paid version. It's the ultimate creative finance investing
Mhm.
calculator, which also allows for various exits like rent by the room, midterm, short-term rentals. It tells you, if you were to raise capital using private money partners, how would the returns look for you and for them? If you're going to use a private money lender, does the deal still make sense? So there is that ultimate creative finance calculator that you can purchase on on my website. I do
Mm,
consulting if you want to just do a one-on-one in regards to, you could pay for the calculator and pay for consulting so that I
mhm.
can show you exactly how to use this calculator for that specific deal. Or you just join our Wednesday live underwriting Zooms and bring that deal into the Wednesday Zoom. We can underwrite it together. So there's a
Oh,
variety of options. It just depends on what you're looking for and how quickly.
love that. Okay. And so the meeting, the one-on-one meeting, is that also on the website? So can I just search
Yeah.
it there? Okay.
Yeah. So if you go on to michaelmnat.com, and that's linked as well. If you
Okay.
go to that, you can see it on there. Either it is right now or it will be by within the next hour or two, because I know we're updating it right now. So you can book
Okay.
directly through the website. So it's even easier, because usually people pay and then you have to coordinate it. It's like more it's too many steps. So I just wanted it
Yeah.
linked directly through the website so you can set everything up and get access to the calculator immediately. So that it's basically a discounted rate for my 30-minute consultation, plus
Mhm.
for the ultimate creative finance calculator that you get lifetime access to. And it has all those features, and every single time I make an awesome update, you also get access to all those updates as well, which is nice.
Awesome. Okay. Yeah, I'll look it up for sure.
Awesome. Thanks, Jackie. If you have any questions, just DM me anytime. I'm happy to help, especially if you want to ask questions in the Skool community, and I can answer there too, so to help as many people as possible.
Beautiful. Love that. Thank you so
Thank you.
much.
I appreciate you hopping in today.
Yeah. Thanks. Thanks for having me.
Of course. All right. I think we're going to call it. All right.
Mhm.
Bye,
Thanks,
everyone.
Michael.
Oh, you got a question, Aaron?
Nope, I was just saying thank you. Appreciate your
Perfect.
time.
You're welcome. Of course. I hope you guys have a great rest of your day. See you next
See you
week.
next time.
See
Bye.
ya. Bye.